Hello, everyone. Welcome to the Crypto Outlook for 2025 webinar. I'm your host, DJ Shaw, finance reporter here at ETF.com, and I'm joined by Katherine Dowling, executive management team member, general counsel, and chief compliance officer at Bitwise Asset Management, David Lavalle, senior managing director and global head of ETFs at Grayscale, and Sylvia Jablonski, CEO and chief investment officer at Defiance Investments. We'll be discussing a bit of an outlook for the rest of the year, the Trump factor in crypto, regulatory shifts under the new administration, and the wave of new crypto ETF filings. Thanks for being here, everyone.
Pleasure to be here. Thanks, DJ.
So I'll go ahead and get started on the market performance and investor outlook for 2025 section. The cryptocurrency market has experienced volatility in recent months, influenced by new regulatory policies and a wave of crypto ETF filings, and the announcement of the U.S. Strategic Bitcoin Reserve. Major cryptocurrencies like Bitcoin, Ethereum, and XRP have seen sharp declines, raising questions about what the rest of 2025 holds for investors. Sylvia, in the past few months, Bitcoin has dropped I think the last time I checked was about 16% over the last month. Other major cryptocurrencies have seen similar declines. What are the primary factors driving current trends in cryptocurrency prices, and how should investors navigate this volatility?
Great question, DJ. So I think we came into the year feeling pretty strong about crypto, Bitcoin in particular, right? When you heard about the election results, there was this automatic kind of momentum in the price of Bitcoin and a lot of the different cryptocurrencies. Top three you mentioned in particular, over 100K and all things looked good. Altcoins were surging. Institutional money was flooding into crypto and into Bitcoin. And, here we are today with Bitcoin, hovering at a much lower price, right? Trading around 82,000, I think is the last I checked, and, kind of within that 80 to 84 price range. And so, what happened, I guess, and what could happen. I think a lot of times, there's been this debate as to whether or not Bitcoin is a hedge, is an inflation hedge, and if it will, behave more like digital gold or more like a commodity and be a portfolio alternative investment, or whether Bitcoin and crypto are like, high volatile growth stocks, and if they'll behave like the NASDAQ or like the riskier names in the NASDAQ and whatnot. And so I think we've seen a little bit of both over the last few years, but in particular, this last, kind of tranche of pullbacks, I think stems from the same thing that risk assets are suffering from. So, my thought there is that a lot of the uncertainty around tariffs in the market would have spooked investors and, kind of like why we're seeing the sell-off and why we're seeing the pullback. There's uncertainty around tariffs. No one knows for how long they're going to stick around, what that means. Does that, this like kind of growth scare, are we going to go into a recession? A lot of times when things like that happen, you have investors either sitting on the sidelines and not deploying funds into any kind of risk asset, or taking gains and kind of selling off. So, and taking gains was probably part of it too, right? When Bitcoin hit 100,000, and so here we are, and so what's the future? I think the future depends on a lot of things. So one, you do have this allegedly crypto-friendly president, which we'll see how that pans out. Like if the U.S. is going to invest in crypto and fully invest and develop out this reserves project, I think that's a very bullish type of signal for crypto assets, Bitcoin, Ethereum, XRP in particular. Maybe some others. We'll kind of see what happens there. But I think if it comes to fruition, for sure, you're going to get some upside momentum there. I think continued institutional adoption. A lot of institutions have been watching crypto for a long time. And then, David and his friends over there at Grayscale came out with GBTC, and it became tradable on an exchange. And then all of a sudden they could do, actual due diligence and put it in the accounts that clients have and things like this. And I think that, other firms who have not done that yet have been watching that and observing that and creating their own kind of like rules around it. As the demand there persists, you're going to have more institutional adoption, pensions, RIAs, and of course, retail, which we know, and kind of sky's the limit there too, right? Maybe you have 401ks opened up to this. So like increased future adoption, I think, by institutions is another big one. the regulatory landscape, like what are the rules around this? How will this be regulated? What are the tax consequences? Are there going to be any kind of benefits to holding Bitcoin or different types of cryptocurrencies? So I think a lot of it is just macro backdrop, what the president does, and then all of the other stuff that just comes along with crypto too, right? Like which coins end up being stable, commercial, dependable. We've seen all sorts of things over the years, like the meme coins that came out, around the election, things like that. That stuff falls to the wayside. But so I think kind of like what remains stable, commercial, will be scalable. And then the other thing is like we have a MicroStrategy ETF, right? So you have these companies like that. Tesla's another one that just buy up loads of Bitcoin on their balance sheet. And I think as that continues, you also have this tailwind there for assets, and they're notable, right? You're talking about like 40 billion in Bitcoin for MicroStrategy and Tesla and some other companies. So I'll stop there.
Yeah, I would say that, when we take a look at some of the price action in Bitcoin more generally, it's really something that is just a result of uncertainty in market. And uncertainty in market leads to volatility. What I would say there's tremendous certainty around is the reality that we would all agree, and look, this is ETF.com, like, you had an ETF that came to market and many ETFs that came to market doing what ETFs do, democratize an asset class, giving investors of all shapes and sizes a really high degree of confidence that they can buy and sell exposure in Bitcoin that's going to track the underlying price of the asset or the token. And so that has allowed a great deal of certainty, and that was a real inflection point for opening up kind of mass adoption or giving credibility and validating this asset class in the form of an ETP wrapper that we would all agree is a battle tested wrapper to offer largely the advised market the opportunity to allocate. And so as I think about investors' attitude towards Bitcoin, and I think about the conversations that we've been having over the past year plus since the ETP has been in market, the conversations that we're having with investors is really about the reality that the risk that they had in managing their clients' portfolios has really inverted. Historically, before the ETP was in market, there was an asymmetric downside risk to an advisor telling one of their clients to put a portion of their portfolio into Bitcoin. After you have an ETP in market now, that asymmetric risk has really inverted. And so the inversion is putting advisors in a place where they need to have a strategy around digital assets. They need to have a strategy around what they do with a potential Bitcoin allocation. And that's something that has been, a really great opportunity for the market to respond to. And so advisors now have an asymmetric risk if they don't have a Bitcoin strategy or they don't have a digital asset strategy. And so none of us are going to say that we're going to take volatility out of the market in any asset class, and certainly not in digital assets. But we are here to say that the ETP is offering a really high level of conviction that you can invest in the asset, in this battle-tested wrapper and make an allocation into your portfolio alongside all of your other investments, and work with your advisor to make sure that you're managing your risk appropriately. And investors, through their advisors, largely now have an opportunity to kind of experience that investment, despite the fact that there's been some volatility in the market.
Yeah, I agree. The volatility in the market, and Sylvia hit on each of the factors that I would point to as well. But I think it's important to see through the volatility storm, if you will, to some of the baseline foundational elements that have shifted. And these are positive for crypto. So overall, if we can kind of get through some of these macro factors that are still undecided, right? Tariffs, like, is that going to cause deflationary, inflationary aspects? We don't yet know that because we don't know how it's all going to play out, whether it's going to come to pass, and the details on how that will happen. So we need to look through and see, okay, well, what is shifting? And some of the other areas are, on the whole, quite positive. We have a scenario where we've had all of these enforcement actions that have been raining upon the crypto ecosystem. And really what's happening now is we're seeing a flip in that. And it's important not to confuse this, especially as the investors, not to confuse this as deregulation. It's actually reversing what is going back to more of a normal state. It's not normal for enforcement to define the regulatory path and to set the rules and to set policy. And that's what the trend was under the Gensler administration. It was, let's enforce and we'll ask all the questions later. Now what we're seeing is a reexamination and a realignment of resources to better balance the approach in keeping with historically how the SEC has looked after in newer markets. So that's what we're actually seeing. Again, it's important that it's not deregulation, but it's the looking at each of the cases that are out there based on their own facts and circumstances and trying to create a friendlier environment so that both sides can dialogue, work with each other, and actually come up with a clearer path. And I think that's really important to note. And I think that will be carrying through as a theme. And I think that's one big positive that all of us in the industry are experiencing, because there has been a large number of reach outs to various players to say, what have you been experiencing? What do you think the SEC, needs to examine? Where can exemptive relief help? Again, it's not deregulation. It's just looking at, let's actually get to the regulatory clarity. And at the same time, we're also seeing some very positive movement in Congress as well, which all is kind of on the march forward through the storm of the price volatility that we are all experiencing right now in the markets, even more, more broadly, obviously, than just crypto. It's a risk-off environment.
Wonderful insight. My next question, I want to talk a little bit about the recent downturn we've seen. I was actually just reviewing some flows, and I noticed that GLD had about 800 million. I can't remember the exact number, but it had a lot more flows, even though it was more stable performance-wise when you compare it to IBIT, which had about 120 million in outflows over the past month. How do the recent regulatory and governmental actions impact the attractiveness of crypto ETFs to investors, especially in a declining market? Are they reevaluating their positions?
Look, I'll take a stab at that. What I would say is that, again, the ETF and certainly our ETFs are doing an incredible job of ensuring that investors can invest in Bitcoin or Ethereum with a high degree of confidence that their investment is going to track the underlying asset with a high degree of confidence. And so how investors are utilizing, or how investors are taking a look at ways to utilize digital assets as a component of their portfolio, and Sylvia had touched on this a little bit, is going to be different for different investors. And so the idea of Bitcoin being digital gold and something that can be a digital store of value is one aspect to how investors are seeking the opportunity to incorporate Bitcoin into their portfolio. But increasingly over time, digital assets are being viewed as a disruptive technology. And so it might be a reallocation of some of your small cap tech versus a reallocation of some of your perhaps gold or inflationary protection aspects of your portfolio. And that's what's really exciting, that now that investors have an opportunity to have an ETF in their portfolio alongside all of their other assets, to be able to create a balanced portfolio in partnership many times with their advisor, gives them the opportunity to really have a very transparent and a very high degree of confidence of ensuring that their portfolio is being managed both actively and very transparently and with a high degree of confidence.
I think, DJ, to your ask in that question as well about the shift in the regulatory landscape, that's actually quite important to the institutional market. Of course, they have a fiduciary duty to make sure that the investments that they're putting their clients into can pass those tests. And time and again, when we meet with RIAs in and about crypto investing, that's come up as a thematic, that it's important for them to be able to get that sense of security that they can say to their clients that this is copacetic from a regulatory standpoint. So the more we see that regulation and the more we see products that have gone through the SEC process, like the spot Bitcoin ETF, spot Ethereum ETF, it gives them that confidence to bring those dollars in off the sidelines to be able to provide this asset as a as a diversified asset in their portfolio. Like David was saying, people come to these products for different reasons, but certainly diversification being one primary aspect that RAs are looking at for their clients through the trend of price volatility in this product.
Yeah, I think Katherine brought up a great point too. So once you have two things: one, access. Dave talked about the ETF wrapper, and two, Katherine's describing once they have that level of comfort around the regulatory framework and they're able to kind of do due diligence and get comfortable allocating. The third kind of part of this, I think, is also that ETF issuers get involved, and we have these sort of straight level ETFs with exposure to Bitcoin or Ether or whatever it might be. But you also have providers that will come up with different products that are basket based, and they will hold different cryptocurrencies as a component of the product that they offer. And I think that that's also another potential growth opportunity that will benefit from the transparency and the regulatory framework. So, for example, if you have just a momentum ETF, right? And now all of a sudden you can put one of the crypto ETFs in there or put, spot product in there. Things like that also help propel the market forward and commercialize it.
Yeah. And the options availability as well, Sylvia, too.
Yeah, that's a great point too.
The ability.
Yeah. Or the ability to even get income on the underlying asset too, like these options income products.
So I want to ask one more question in this section before I move on. And let's see, David, I wanted to ask how might the current market sentiment influence the development of new crypto investment products, and what trends should issuers be paying attention to? And then I wanted to ask if you could talk a little bit about what you're hearing from advisors.
Yeah, sure. Well, to start on kind of trends in product development, I think we have largely gone from, a very certain and unfavorable regulatory environment to, a much more favorable, but perhaps uncertain regulatory environment. And so I think that has led to a proliferation of products that are kind of currently in development. And we have also seen kind of on file from a number of different issuers. So I think we're going to see, products potentially come to market that are further down the cap spectrum within, the universe of crypto tokens. I think to some of what Katherine and Sylvia had kind of alluded to, also other trends in traditional finance, from a product construction perspective. So whether it's multi-token products, whether it's sort of factor overlays like momentum, or even some other products that are incorporating the somewhat recently approved options on the crypto ETPs. And so you're able to kind of incorporate a cover call strategy. You're able to incorporate some sort of yield generating or income generating strategy, taking advantage of some of the options that are in marketplace, I think. And lastly, you're going to see kind of global equity representation of digital assets. And so whether that's a mining exchange traded product that's based on global equities, or you might see other introduction of global equity based portfolios that are taking into account the opportunity to take advantage of some of the infrastructure that is existing in the crypto marketplace. I think those are kind of all areas where we're going to see proliferation of product development. And to your second question, in talking to advisors, I touched on it a bit earlier. There's I won't say in a dramatic fashion, a panic, but there's certainly a concern, because for a very long time, advisors really were not put in a position where they had to educate themselves on digital assets, and they weren't in a position where they even had an option to incorporate digital assets into their clients' portfolios, because there wasn't really anything that was available on their platforms. And with the approval of these Bitcoin ETPs, and the opportunity to kind of onboard those Bitcoin ETPs onto their platforms, they certainly now didn't really have a place to hide, so to speak. So now clients are asking about how they can gain exposure to Bitcoin, how they can gain exposure to Ethereum. And with the availability of the ETFs, it's putting advisors in a position where they really need to be educated. And so we're really proud, and I know Bitwise is as well, to be a crypto expert, to be able to partner with advisors and to put them in a position where they can have the appropriate level of education, where they can be informed about how to incorporate crypto into their clients' portfolios and take advantage of these exchange traded products, which are a wrapper where the advisors and also the advisors' clients are familiar.
Actually, David, it's a great point. When we talk to advisors, I'll take it even one step further. Not only are they getting asked more questions about crypto coming from their clients, it's coming from their clients' kids, right? They don't want to lose their clients because the kids are saying, "Hey, like, you got to get into this crypto thing." So I've been finding this to be a huge uptick theme that it's okay. We need to get into crypto. The good thing is with these ETPs, that is a familiar wrapper, right? So if you have an RIA or financial advisor who maybe heretofore has not been familiar with crypto and is in that process, David, that you mentioned of getting educated, and agree. I think Bitwise and Grayscale both do a great job of that, that research forward approach to speaking to advisors and giving them the 101 or the 102 or wherever they are on the crypto education scale, but giving it to them in this wrapper that they understand from traditional finance, and then wrapping in the aspect of, okay, here's how these assets work. Here's how they function. Here's their volatility. Here's the different aspects of it. It actually creates somewhat of a more comfortable zone because they can more easily, they can put this asset in their clients' accounts. Whereas if their clients or their clients' kids have a wallet, they can't put that into the assets under management for them. So that's why it's one of the many reasons that the ETF product and having these digital assets in that allows for this additional kind of easier approach to adding this asset to their portfolios.
Yeah, I would layer in. I totally agree. Let's put some real numbers behind it. So 30 trillion in wealth is managed in the advised market, and there's 80 trillion in wealth that's going to generationally transfer. And so just for estate planning alone, it makes so much sense for advisors to have all of their clients' assets in one place to be able to pay attention to and to be able to manage from an estate perspective. And furthermore, we're talking to advisors, and despite the fact that the allocation to crypto might be 1 or 2 or 3, or even an extreme example, 5% of a client's portfolio, it's dominating 80% of the conversation. And so they're increasingly in a position where they need to be more intelligent about how they can talk to their clients, and how they can talk to their clients about where that fits in their portfolio and how it's behaving.
Yeah. And to your point earlier, David, there's also some kind of additives, kind of concentric circles of adding to these products that, it's not like the one size fits all, right? We now have some of these kind of equity basket ETFs that are crypto involved. So it might be, a more palatable approach for some folks who just kind of want to step in, but maybe don't want to actually have an account that they feel is a little less conservative, right? So you have these crypto aspect equities that, depending on the theme that appeals to you, you can look and say, okay, this actually works. Or, treasury rotations to kind of take off a little bit of the edge of the volatility. So kind of using some other assets out there to create a product that kind of fits the specific needs. Again, and as David mentioned earlier, like not every product is for every individual, but we're getting more and more products out there. So it's kind of wider appeal to the market.
I also think that within that wealth transfer that Dave just mentioned, some of that is definitely going to the financial advisory world, but a lot of that is also going to, we're talking about, Katherine mentioned the kids that are interested in this, they're actually going to the retail community, right? And we do a lot of work kind of like marketing and seeking feedback from that community. And what we find actually is that with our ETF, which has, exposure to Bitcoin through a balance sheet of another company, so much of it is actually retail. And that's another group of people that need, kind of like education, transparency around all of this. I happen to live in New York City in a building full of doctors and surgeons. And I get questions all the time about like, I would love to hold Bitcoin, but like, how do I mine, how do I mine it? And I'm like, what do you mean? You can buy an ETF in your account. And so
you may not want the mining in your building, Sylvia. That might
right. But I'm just so like shocked by that question. And, we live in this world. And so it's what we talk about all day. But if you think about this, kind of like the TAM, the total addressable market for crypto and Bitcoin and the opportunity out there, both to Katherine Day's point about like the youth and to the education that is going on, but also needs to be had, the sky's the limit for adoption of this, I think.
Agree.
So I want to switch gears and talk about the Trump factor in crypto.
Who? What do you mean? What are you talking about?
Well, the influence of President Trump's administration on the crypto market extends beyond the strategic Bitcoin reserve recently announced. Um, Policies such as tax incentives for crypto businesses, federal blockchain initiatives, and the endorsement of certain tokens like Trump's own Trump token are reshaping the regulatory and market landscape. The administration's actions are raising questions about how government involvement will, wow, sorry about that, how about how government involvement will impact investor sentiment and regulatory approaches. So, Catherine, I want to ask you this first question. The proposed strategic Bitcoin reserve includes assets like Bitcoin and Ethereum, marking an unprecedented federal move. What legal and regulatory implications arise from the government's involvement in establishing a strategic Bitcoin reserve?
Well, right now we have a lot of statements around reserves, stockpiles, right? We don't actually know where this will land, and it's going to be longer before we know exactly where it lands. We have the strategic Bitcoin reserve. Then we've had mention of a stockpile. It's also been called a reserve, adding in additional assets. So kind of where we ultimately land, the devil's in the details, because are we talking about a Bitcoin reserve right now? We're talking about Bitcoin reserve with seized assets, right? So we're not involving, we're kind of not involving the deficit, not doing a purchasing program, which is something you typically would associate with a reserve, but we're looking at ways to increase the reserves of the nation. And our nation has more reserves than many of us may even be aware of, which is important. You actually, if we got a lot of smart people in a room and sat down and said, "Hey, what other assets should we have a reserve of in the event that something goes south?" Right. So it is an important exercise to go through. But then you get to, okay, why these particular assets when we mention more than just Bitcoin? And when that news came down, I think it was universally panned, at least in that moment, and how it was discussed. And then you saw kind of a little bit of a backtrack to, okay, now we're just talking about a Bitcoin reserve with seized assets. More details to follow, right? So top note, I think a strategic Bitcoin reserve is a good idea. And I think that there are ways that this can be accomplished without impacting the deficit. So I think both of those things are important, but I think there are other areas of the government that will and should be involved in that discussion. And I think that's kind of the direction we're going. But obviously, sometimes we get the kind of top line statement and a reaction to that top line statement. But it's important to know that it's just a statement, and aspects can change with further discussion with the experts in the space. And take politics aside, whatever your view is or isn't with regard to President Trump, he has tapped a number of folks within the crypto ecosystem that are well-respected, smart people. And I do believe that they will bring to bear important facts to that discussion and to that table. And when you look at who he's tapped for the head of the SEC, Atkins is very well-respected. He's a veteran. So again, politics aside, when you're looking at some of the folks that have been tapped to lead these different areas and be part of that discussion, it's a good group of people, and I trust that they will bring the right facts to that table. But again, we just have to be careful about the headline statements and separate that out from the actuality of what will come to pass.
Yeah, it's words and actions. And so, some of the actions that I would point to would be President Trump's executive order, the creation of the task force. This past Friday, there was a crypto summit with a lot of leaders from the crypto market, as Catherine was kind of alluding to. Soon to be confirmed Chair Atkins is someone who reveres the agency of the SEC and respects the rule of law, and I believe is going to put the marketplace in a spot where disclosure is going to reign. So, the opportunity to kind of come in and have a conversation with the SEC and to talk about how we can develop high quality products that are going to be based upon law, the rules of the SEC, the rules of the exchanges that we're bringing these products to market in. And then also, the opportunity to properly disclose exactly how these products behave is going to be something that I think is going to be really valuable to the marketplace.
Yeah, I agree, David. And I think many of us have been experiencing that SEC door is already reopened, and there seems to be a number of positive conversations happening between the SEC and members of the crypto community. And I think that will be really important to getting to that kind of regulatory piece of it, and it will help. And the SEC has stated as much that those conversations are going to guide them and help them prioritize which areas they want to address first when they put their resources towards, okay, which area do we address first? The majority are talking about this being an obstacle, a stumbling point. Let's focus there first. So I think the right conversations are happening, and we're seeing a really good clip to and a good energy behind making things happen and sticking to deadlines rather than just kind of academic conversation that keeps happening and swirling and doesn't go anywhere. It feels like a positive momentum.
Yeah, and I think what's nice for the market with this, or what could be potentially good for the market, is, as David and Catherine have said, there's a lot of strategic thinking and discussing and debating and action plans being discussed. It's being handled much differently than the tariffs are, for example. And so, when you have these kind of cooler heads with a lot of expertise that actually come up with a plan, and that plan is then introduced to the market, I think it goes back to what we've been talking a lot about. Like you have transparency, you'll have a means of accessing exposure to cryptocurrency, whether they decide to use, direct exposure or ETFs, whatever it might be. But I think the way it's being handled is the point that Catherine and David really make. It's something that the market really likes, and when there's a plan that could be acted upon, I think maybe you see some of the crypto assets move price wise off of that positive news.
And David, Sylvia, I want to ask you about Trump's endorsement of his own cryptocurrency. That has sparked some debate about credibility and regulation of political figures launching tokens. Can the government's actions, including the promotion of certain tokens, influence the perception and adoption of cryptocurrency among traditional investors?
It's tough to comment on that one. I almost kind of find it funny more than anything else, right? I think that you'll have this tokenization of random things along the way. It feels a little bit like meme stock era to me. But, I think that there are certain cryptocurrency, like I think Bitcoin is far enough along, right? You have ETFs launched, you have all the stuff we were talking about. Institutions have adopted this. It's become a little more commercialized and accepted. There's, some level of regulatory framework around all of this. Due diligence can be done. And so I think that, the kind of like large cap or cleaner, whatever word you want to use, cryptocurrencies will prevail and probably won't be too tainted by all of this other stuff. But, I don't know what like the growth potential is outside of a short period of time of excitement is for some of these other types of coins.
And David, I'll ask one last question on this section.
Sure.
How does this development in the U.S.'s more proactive stance in adopting and regulating crypto assets influence the position of the U.S. in the global cryptocurrency landscape compared to other nations?
Yeah, I mean, President Trump has said he wants the U.S. to be the crypto capital of the world. Again, that's words. Now, all the actions behind it that I kind of listed off previously are an indication that, taking steps in that direction. I think one of the things that we haven't discussed is the reality that there's been bipartisan and bicameral support on the Hill. And I know Catherine had mentioned it earlier for a number of different, aspects of, our policy to be shaped. And that puts us in a position to have a more defined, regulatory framework to be able to kind of grow and proliferate many aspects of the crypto or the digital asset marketplace. So, SAB 121 is another example, and we have many other examples of over the past 4 years, 5 years, where there's been difficulty in the ability for innovation to happen within crypto. And I think the change in posture and the change in stance and the change in regulatory framework and some of the positive momentum that we've seen on the Hill has put the U.S. in a position where it's going to be more attractive, for innovation, more attractive for entrepreneurship, and will allow us to, compete more favorably, with some of our, competing domiciles. You take a look at some of the innovation that's happened just in the ETF wrapper alone around the globe relative to, where we are, and we've got a lot of work to do. And I think that we would all agree that we're in a much more favorable regulatory position to be able to engage with the SEC, to be able to compete more favorably with other domiciles. And I think that's going to be the case for entrepreneurship and for firms to grow as well.
I would agree with that, David. I think for years to come, historians are going to have a field day looking at the Biden-Harris v. Trump election and what led to the results we saw. And I think right now, part of that is wallet, part of it is embrace of technology. People's wallets felt empty, and there was a feeling that the technology was not being embraced, not just in crypto, AI, a lot of other areas. And the Trump team came in with a really clear, hard message on we're going to make America be the area where we embrace these technologies. And unfortunately for Biden/Harris, they were kind of slow to send that message. When we were looking at in the run up, we saw like there were a couple tidbits that Harris threw in there, but it was like tiny little pieces, and you kind of had to stitch them together to see, okay, what's her view on crypto? And you had people trying to encourage her to go to Nashville, go to the Bitcoin conference, to kind of present a support of crypto and of technology more broadly. And for whatever reason, there seemed to be a hesitation, whether it was trying to get the facts straight, who knows the reason. Again, historians are going to have fun with this one, but Trump did embrace it. And I think it's really important messaging. And it's something that we've seen in the crypto market. We've seen businesses, viable, good businesses, be pushed offshore. We've seen this happen, not because they were bad actors. It's because they didn't want to be labeled as a bad actor. They had viable business models, smart people, but they move their businesses over, many. And it has impacts beyond just crypto native folks. We have other businesses that just stopped business lines because they didn't want to be considered. You have like a shoe company trying to do an NFT. They're like, oh, wait, there's an action against OpenSea. Suddenly, if we do this, or we put this on our sneaker, are we going to be accused of issuing securities? They didn't know. Nothing was clear. And you had, unfortunately, an SEC that said, but it is clear. It was this ostrich approach that just didn't further the industry. It chased people off the shores. I would argue that this is what led to the FTX debacle. That's offshore, right? So now we're seeing a reversal of that, and it's a course correction. And I think it's really, really important beyond just the crypto ecosystem, because if you push these businesses offshore and you continue to push technology offshore, I was a former assistant U.S. attorney. You're going to end up with trying to figure out if there are scams that Elizabeth Warren liked to talk about. Good luck trying to solve those, because they're not on your shores and they're affecting your people, but you're going to have a lot harder time from a national security aspect to actually track down the assets and to figure out what's going wrong or that went wrong. Look how long it took to get Sam Bankman-Fried back from the Caribbean. So those are just small examples, but they're examples of what happens when you kind of have policies that aren't clear. It ends up pushing businesses away and ends up pushing a lot of good businesses away.
Interesting point. And I actually want to switch gears to talk about the regulatory shifts under the new administration. The current administration, as you all have mentioned, has taken a more crypto-friendly approach that's led to some major regulatory changes, including the dismissal of lawsuits against major exchanges like Kraken and Coinbase. This shift has sparked optimism in the industry, but also raises questions about long-term regulatory strategy. Katherine, recently the SEC dropped its lawsuit against Kraken, which had accused the exchange of offering unregistered securities through its staking program. This decision marks a departure from previous enforcement actions. What does this dismissal of such a regulatory lawsuit how does the dismissal of such a regulatory lawsuit impact the legal landscape for cryptocurrency firms?
I think the message it sends is we are going to look and figure out foundationally what the definitions are. Because for that enforcement action to be successful against Kraken or Coinbase, Binance, there's a stay of that action. You have to prove up that these were in fact securities. They're kind of base jurisdictional questions and definitional questions. And that is the core that remains unresolved, right? So you have to resolve those foundational facts first in order for those cases to be viable. And when Commissioner Peirce came in and is the head of the crypto task force, she's stated in multiple interviews that each of these cases needs to be examined for their own facts and circumstances. And each of those cases are being examined right now for their own facts and circumstances, and a determination will be made. It can't be a blanket determination with each case. Should this proceed? Should the SEC continue to put resources into this case, or is the country better served if the SEC takes those assets, that resource that they put into these cases, and redirects them into trying to solve some of those definitional questions and trying to set some policies and rules around what is and isn't a security, which it seems like such an easy question. It's not necessarily an easy question, and different digital assets will fall into different categories, but you can't sustain an enforcement action when no one can define what is and isn't a security in the space, right? Like we know so far, Bitcoin is not. We're clear on that. We know Ethereum is not. We're clear on that. Though we could never get Gensler to actually say those words, but allowing the spot ETH product to go out on the paper it went out, just says that it's a security. But now, what is everything else? What is staking? Are there certain types of staking that create securities? Or are we fair game on none of that activity creating security? So all of these questions need to be answered. So, if David's out there staking and I'm the SEC and I say, okay, well, David, we're bringing you in for an enforcement action. David says, okay, can you explain exactly why? You have a fundamental issue if you can't explain exactly why from the mechanics of it.
Right.
That's where we are in these cases. And you've had federal judges along the way for these various cases, a number of them say, hey, we need legislation here. I'm a federal judge. I'm working with what I've got, and I'm supposed to follow the law, which I will do. But I'm telling you, it's not clear. And then you have Gensler going into Congress. I've been in those hearings saying it's clear. We have, case law from, the 1940s. It's clear. So you have a fundamental disagreement. And if you have a fundamental disagreement between federal circuits, that gets decided ultimately by the court. So it's been kind of a whirlwind of kind of jurisdictional questions and where the SEC's jurisdictional is or isn't. But under Gensler's SEC, it was hammer nail. Everything's a security. And now we have a shift saying, hold on, not so fast. Not everything's a security. Let's actually define this and see if these enforcement actions actually have any viability. So that's what you're seeing out there. And I do think some people are misconstruing those steps as we're in this, as I said earlier, deregulatory state, like everybody, it's all just going away. That is not the case, nor should it be the case.
Yeah, and I would say, excuse me, some of the uncertainty on the regulatory landscape historically, not everybody was in a position to be able to challenge, the SEC and some of this uncertainty. I mean, look, we took it to the courts because we felt like we had to, and fortunately, we had a very favorable outcome from the DC Circuit Court of Appeals that led to not only our ETP coming to market, but all the Bitcoin ETPs coming to market. And we did the industry's work in a lot of ways. And we felt like we had to, but we also had the resources to do it and to lead and pioneer in that way. But as we kind of look forward, one of the things that is really favorable and that we're excited about and encouraged about is the ability for us to, put filings, in partnership with the exchanges in front of the SEC's, Division of Trading and Markets that, uphold some of the principles that are really foundational to the SEC, which is, investor protection and capital formation, and the ability to leverage the rules that are already in existence to bring high quality products to market that are going to, meet the demands of our investors. And we're really encouraged that we have, and many have filed 19b4s to bring new assets, new tokens in the form of an exchange traded product to market. And we have the opportunity to, have a discussion with the SEC in a really constructive manner to ensure that all the principles of, creation redemption and an exchange traded product and the ability for the ETP to, track the price of the underlying, asset really with great efficiency, and allow the opportunity to have a discussion to whether or not it should be permitted to be listed and traded on an exchange or not.
And just one quick note to the audience. I do see your questions and I will try to get them answered. I will probably take a moment after at the last 10 or so minutes to ask them. Um, but uh, David, I want to ask you about crypto filings. The SEC's withdrawal from high-profile cases have been interpreted as a sign of softening regulatory stance, encouraging more crypto ETF filings. What might this regulatory shift have on the development and approval of new crypto ETFs?
I kind of touched on it before. We and others have put a number of filings in front of the SEC, and just to use, as recently as December, many filed for a single asset Solana ETP. They were all rejected by the SEC, and fast forward a few short months, and you've seen a much more open regulatory framework whereby Solana filings and other filings for single asset and multi-asset token ETPs, have kind of entered the 240-day process of the 19B4 filing process. And so it opens up the opportunity for, the SEC, issuers, industry participants, exchanges to have a really thoughtful dialogue and a constructive dialogue around whether or not, the product should be permitted for listing and trading on an exchange. So I think it's certainly a more open environment. Again, it's a more favorable environment. There's a little bit of uncertainty, but I take that uncertainty as, really positive, whereby, we have the opportunity to make a case for why a particular token inside a particular, wrapper, in this case, the exchange traded product, should be permitted for listing and trading and should be permitted for, all investors to take advantage of that exposure.
And I think when those arguments are made and they're successful and that first issuer comes out with the product in an ETP, it also creates this waterfall for other issuers to complete, immediately start thinking about, okay, what else can we do? Should we leverage it? Should we put options on it? Should we create a short version of it? And, all of a sudden you can see how this ecosystem just continues to broaden and broaden and broaden as those decisions are made.
Yeah, in the run up to the spot ETH launch, right? So the portion, and for the audience, there's kind of two sides to the kind of pre-launch, right? There's the 19B4 side of the house that we've been talking about that has, a prescripted time frame with tranches along the way where the SEC can take more time, and it's often expected that they will, but often misconstrued by the industry as a negative sign. It can be. And then there's also the kind of the S1 side of the house. You've got trading and markets on the 19B4 side of the house, and you've got corporation finance on the S1 side of the house. Disclosures and the 19B4 side is really the exchange's filing and getting approval to list this type of product on the exchange. So when we saw in the lead up to spot ETH, there was a flavor that it was going to take a long time because there was no statement with regard to the security or non-security status of ETH. We thought that was going to have to be defined before we could actually launch that product. So we thought it was going to be a while. And then political winds intervened and that moved forward, right? So now you have, as we refer to, the kind of there are the other digital assets that could be placed into this ETF product. And a number of those are in the 19B4 and the S1 filing stage. So you're seeing a lot of issuer activity of placing both of those filings, and you have the SEC that's going to have to sort through those filings, talk to the various issuers, and get a good flavor of how they work. But again, some of this does come down to the view on what these assets are or are not. David mentioned the pull for the Solana filing. There's a question mark out there of, okay, is it or is it not a security, right? So how does this tie into DJ's question with regard to some of the lawsuits? Well, it ties in because some of those lawsuits also pivot around this fundamental question of, is this or is this not a security, right? So I guess what we're seeing if we're tea leaf reading is, one, we're looking at the facts and circumstances of each of those cases to see whether there's any merit or whether they need to back off the enforcement, figure out definitionally what's happening, and then take the next steps. For these product filings on the other side, that's also a pivotal question. And I think right now what you're seeing is that the SEC is considering those and seeing, okay, let's kind of look at each of these and see, do we think we can move forward? Do we think this is or isn't a security? And that's kind of being answered, hopefully, through this process. So that's what we're kind of looking at, and that's the purgatorial state we're currently in.
I'll tell you what, it's a heck of a lot more exciting and a lot more fun than just having rejections at the front door.
Yeah, I 100% agree, David. And I think that's where the tenor has changed substantively.
Yeah.
There's actually a willingness to engage, to hear, okay, how do these products work? Let's talk about how these products work.
Yeah.
Right? Like, so I think that's an important step. And I think it's also really important, and I remind folks of this all the time, it's important that the SEC does do that job, right?
Sure.
We do want to make sure they're not supposed to stop certain types of products, but they are supposed to make sure that they fit into the workings of our markets. And that's very important for investor protection, for the workings of our markets, and to make sure that there's not some easy backdoor way to defraud the market. So I think it is important that through this kind of that 19b-4 process on the exchange side, that we're looking into operationally, how do these work, right? And that also ties in, David, as well, to the in-kind analysis. Right now, we have these spot products that only trade through cash steps. And in the lead up to the launch of the spot Bitcoin and spot ETH, there was a big debate and dialogue with the SEC over whether we could go forward with what's known as in kind, so that you're not having to exchange cash. You can actually just kind of do the in-kind movement, which is more efficient. The cash works. Obviously, it is working, has been working. It's a success. These have been very successful products, but there's a more efficient way to do it with in-kind. But that impacts other areas of the regulatory landscape that need to be examined. Europe, they're doing in kind, right? They've got it working. So we have many examples to look to. And I think that's part of the next wave of additions to some of these products that will make them, even more, viable and, create more liquidity, et cetera, in those product markets. So that's kind of like the next wave of what's to come, in kind staking.
We're running a bit out of time, but I do want to ask one question from my fourth section on the wave of new crypto ETF filings. Sylvia, I wanted to just kind of look at the different filings that are coming out. Investors are choosing between ETFs tracking altcoins like XRP, Solana, or they will be choosing between altcoins, and then there are more established coins such as Bitcoin and Ethereum. How should investors evaluate the potential of these new crypto ETFs compared to established ones like Bitcoin and Ethereum?
Yeah, I think that's a great question. So I think it depends on the investor. The newer coins, the alt types of coins, I think will get a lot of retail demand and retail interest. If you kind of scour through the Reddit world and X world, there's a lot of chatter about those products. Lots of interest there and investment intentions there. I think in terms of the larger institutions, like it took, and I'm sure David and Katherine have some great stats on this, but it took so long for them to get to the point that they would invest in any kind of cryptocurrency. And I think the first one that they chose to invest in was Bitcoin, and namely because it became, as we discussed, an ETP product, a product that was traded and listed on a regulated exchange, something that they had a regulatory framework around and could kind of like manage and assess the risk and potential investment benefit of. And so I think that'll continue. I think the kind of the larger cap, more named, more well-known commercial types of cryptocurrencies will continue to be the ones that get the flows for now from that institutional channel. But I think, it's kind of true of all ETFs, right? Like if retail adopts it and you get enough volume and interest and volatility, then, the altcoins start to become more commercial and well adopted. So I think it's just it's a demand thing, and B, it's just kind of like institutional rules and needs for regulation before they dive into something new. So I think you'll see the leaders continuing to lead for a while.
I would say, if we could just snap our fingers and say, you have, the top 20 tokens are available in an exchange traded product. And I know that's a big leap, but let's just suspend reality for a moment and say that we got there. I think there's a couple of things to really highlight here. Number one, the exchange traded product has proven to be a battle tested wrapper that can give investors exposure to a vast and very broad range of asset classes with a high degree of confidence. And so, perhaps it's not my, purview to say that a token is, good or not good, but I can say that if we're going to list a token and it's going to be in an exchange traded product, that we do feel confident that you can take a long or short position in this, with a high degree of confidence that you're going to have, the exposure of that underlying token. Now, to the point of whether or not you want to invest in that token, you have to rely upon your partners. I've long said that not every ETF is created equally, not every ETF issuer is created equally, and not every token is created equally. And so partner with your issuer and get that intelligence. And if you call your issuer and you can get the intelligence on that particular exposure or that particular token, and you can take solace in the merit or the investment thesis associated with that token, then great. And if you can't, then perhaps it's not something for you. But there's a tremendous amount of resource out there in the issuer community to be able to take advantage of that. But I think it's always favorable to know that the ETP wrapper is something that has been battle tested, and further proliferation of crypto tokens coming to market in the form of an ETP is a benefit for investors.
So I want to move on to just a few audience questions. The first one here, Sylvia, are we going to see more battle shares, possibly with crypto players, whether direct BTC or via holders like MSTR? Seems like with Elon, that pure equities single long short might have low demand, but a crypto-based version may be more attractive.
You're reading our minds. So I'll just leave it out there that we're always open to new ideas, and our company, we are kind of a startup, and so when it came to launching crypto-based products and crypto ETFs, it's difficult for us to kind of win the race of being first to market, and so we often have to get creative when we're in a space that's heavily traveled and whatnot, and so MicroStrategy was kind of like what we thought was missing. People have done a lot with crypto and a lot of Bitcoin types of funds out there. What's missing? What's another way to get around it? And so to answer your question, when we think about battle shares, those are definitely conversations we're having in terms of which crypto products do investors like, which ones do they seem to like less or wish to short. And so it's definitely an interesting topic for us, and you might see something more from us there.
This one here is, I think, maybe a bit of an easy question. When you say spot, what are you talking about? ETP? I think maybe one of our viewers might just need a little bit of help understanding some of the terms we're using.
Yeah, absolutely. And sometimes you'll also hear physical Bitcoin, which is kind of an anomaly, right? You don't really have that, but it's referring to spot being trading on the spot markets. So the Bitcoin that would trade on a Coinbase or a Kraken. So it's the actual Bitcoin, as opposed to a product that has futures on Bitcoin or ETH futures. Those products also exist. But when we keep referring to the kind of the spot Bitcoin ETPs, we're referring to those products that track the Bitcoin and have the fund actually they hold a cache of Bitcoin in it. So spot Bitcoin, referring to what you would buy and sell on these spot markets, not futures markets.
And another question, what is the benefit of a crypto ETF over buying crypto through Coinbase, et cetera?
Well, I think different investors want to experience their exposures in different ways. I like to answer this question by starting with gold. Some gold investors like to have, gold in the form of jewelry or gold in the form of bullion, and they want to store it in their own vault. Some investors want, gold in the form of financial product, whether it's a future or an ETF. And some people want gold in the form of, an equity representation of that, like, gold miners. And so I think the same is exactly true when we're talking about Bitcoin. But in the case of kind of the value proposition of owning a spot Bitcoin ETP, is that it really kind of decreases the operational kind of complexity associated with managing one's old own wallet and kind of engaging in the crypto markets directly, you can own that exchange traded product in your brokerage account right alongside all of your other, investments. And that simplicity and that security is something that's really been favored, alongside of all of the other kind of traditional and ancillary benefits of an exchange traded product, which is its transparency and, tax efficiency, et cetera.
And the password reset is a lot easier.
You could, if you have a financial advisor, you can also more easily have that AUM within their purview in an ETF. It's much harder to do that with independent wallets.
I'll ask one more question before we close things off. I hear from clients all the time when I suggest we include a Bitcoin ETF into their portfolio. Quote, why would I do that? Bitcoin is fake. What is it? It is not a physical asset. So why should we own that? End quote. What would the panel be able to give their best response to that question?
I would suggest you go to some of the many resources out there. Bitwise website, Grayscale website, maybe Defiance. I'm not familiar as much, Sylvia, but there's so many resources that will show you what Bitcoin is, how it operates, how it works. Ultimately, the decision has got to be that individual person's, but I think that there's a lot of research out there to show you what it's about and how it works.
Yeah, and I would say just generally to that, individual sounds like potentially an advisor facing off with client questions. If you don't have an answer to that question, you're putting your entire franchise at risk. And that's what we're hearing from advisors. So do the homework and have an answer to that question. And that's not to say that every investor or every client of yours requires or should have an allocation into digital assets. That's the claim I'm making. The claim I'm making is that this asset class is well in excess of $1 trillion and can't be ignored any longer. And as the credibility, and kind of the confidence of the U.S. government and the confidence of some of the largest institutions in the world that are making allocations, and you need to have a position on it, and you need to educate yourself on it to be able to answer those questions for your clients. The resources are out there at our website, at Bitwise's website, at Defiance's website, and so hit us at info@grayscale.com. We'll answer the question.
It's a good point, David. And just to make sure that response is an educated response. If that's your opinion after you do your research, you are entitled to your opinion, but make sure that opinion is based on facts.
All right. Well, that is all. We are at our time. So I want to thank Katherine Dowling of Bitwise Asset Management, David Lavalle of Grayscale, and Sylvia Jablonski of Defiance Investments. I want to remind the audience that a recording of this webinar will be available at ETF.com tomorrow. I know that we didn't get to all of the audience questions, but please feel free to shoot me an email. I'll try and get some answered. I'm DJ Shaw, finance reporter here at ETF.com, and I want to thank you all for listening.
Thank you.
Thank you very much.
Thanks, everyone.